Hello everyone, this is Saurabh. Welcome to the Options Engineer channel. Today I'm doing a special session because it is an FOMC day. I'll walk through the Skyline Butterfly 0DTE version 1.0 replay and the intraday characteristics we observed throughout the day. The focus is not simply the final result. The focus is the path, what changed, where the structure was stressed, and how the payoff geometry affected the experience of observing the full defined risk package through the changing market conditions. FOMC days can contain multiple market regimes in only a few hours. We may see a quiet morning, compression before the announcement, a sharp initial reaction, reversal, and late day settlement. This makes the day useful for studying the behavior of the complete structure. I will organize the replay into 5 phases. I will now move into the options engineering OS replay and walk through the day. This keeps the analysis focused on the full life cycle rather than only the most dramatic move. Now we are on the options engineering OS. I have loaded the options data for today and I have set up the structure based on the 9:45 a.m. entry time, but we will log that in as we walk through because around 9:45 a.m. the value was around 7420. So we continue moving. It's 9:30 and we are seeing the movement in SPX here. And now let's go to 9:47 was the closest one. So I'm going to log this entry. So we have the paid capital at risk, live capital at risk, and the net debit. Now let's move forward to around 10:30 time frame. We can see the PNL is negative right now because there was a big move in the market. This is not similar to the normal days, but market can move in any direction any day. Being FOMC, there was more volatility today. Now we can see there is some loss in the trade at this point in time. Let's continue moving forward, and you can see at the bottom of the screen how the PNL is changing as the market moves throughout the day. So one thing you would notice is it stays fairly in that similar range and it helps with the holdability aspects. Now market has moved slightly out of the range. Now it's in that stress zone, and we have to see how it reacts as the market goes further in time here. And as we are moving up, looking at this now, we can see the market has stabilized in that range. Profit or the PNL is still slightly negative, but it has come back. Now market has started to shift slightly up, and we can see it's almost close to the break even here. And then we continue moving, and we can see we're getting close to the FOMC minutes here. And this is where some of the decisions come in. Do we want to carry the trade into FOMC or do we want to close it, though it's slightly negative, and do a break even here? So that's a decision point. Now let's continue into the FOMC window, and we see there is some profits coming in the trade now, and it's close to 18%. And as we move forward, we reach close to 30% here, though it's in the middle of the valley. So that's one of the interesting points here. Though it's in the middle of the valley, it's still profitable and a decent number here. And as we get close to the peak of one of the areas, it's still a good profitable. So, and this is where we have to make a decision and what we want to do, and do we want to exit or do we want to carry the trade till expiry. The automation was okay to do today, but considering FOMC, it was important to keep some management on the trade as the things can move pretty fast. But still, it provided overall okay level of holdability considering the level of moves that we saw today. Now let's go back in time, and the other decision point that comes in is we are getting close to the FOMC minutes coming in here. And at this point, and considering the amount of volatility we have seen, we might want to look at extending the structure and giving it a little bit more breathing room to work through the FOMC minutes and activity there. So I'm going to add a couple of butterflies in this view. And these are similar to the butterflies I discussed in the Theta Profits podcast. These are 20-point wide and they're going to be on the left and right. So because we don't know which direction the market might move, I'm going to log them in as a one decision point and assume that these have been executed, and the paid CAR is 130 and $34 here at 130. So that kind of increases the overall capital at risk, but gives a bigger range to move if we did not already exit the position. I'm going to combine all these three structures together to get the overall payoff view now. So let's combine it here. Now we can see that we have the four structures. The active structure is the combined one over here. And we are going to set it as an entry now and for this whole structure, and walk through how the structure behaves now going forward, as this is the structure that's active now and the other two structures are part of this, or other three structures. I'm going to zoom into this, and so we can just see closely how this behaves. So we can see the market starts to move up here, and then it moves quite a bit here. It's close to 7441, 744 is what I saw, and then it starts to go down here, and we can see the profit ranges are still there around 13% here at this point. We continue on here, and we can see still at around a 10% profit as it's getting close to the edge of the overall structure. If you had not added the new butterfly on the left, we will be close to the end of the structure. So now we continue on, and we can see that it's getting close to the last butterfly, and this is where sometimes you have to make a decision. Do you want to add something additional, or you are comfortable based on the support zones and the extension in the market? So now we get to 3:57 p.m. and the PNL being shown is close to 30% profit, and then the market closes, I believe it was around 7316, and the PNL would be better. The options pricing had not settled yet post closure at the right marks, but overall we can see the trade would have been more profitable if it had ended at one of the peaks here. So let's look at how the other structures would have performed here, and what helped and what didn't help. So if we look at the existing structure, that would have had, if we had held till exit, a loss today, but the additional adjustment extended the range and made the trade profitable, and the right hedge or adjustment was not profitable and lost all the money. So, but overall trade was profitable by making an adjustment, and considering it's an FOMC day, some management was good to do and to ensure that you had the right amount of ranges to manage the volatility. The adjustment between the valleys would have been done as well, but today, as things were moving very fast, it was very hard to predict what adjustment made sense. And as you might have noticed, if you observed the SPX ranges today or how SPX moved, it was moved up quite a bit, moved down quite a bit, and which made it hard to just make any adjustments in the center, but having the wider range gave that holdability aspect, which let you stay in the overall trade and not exit out of it. So that was the kind of the overview here of the overall replay today. My main takeaway is that holdability is a property of the full system. It comes from the payoff shape, the outside floors, the overlap among components, and a clear life cycle assumption. It does not mean the structure is low risk or comfortable at every moment. This is an important limitation. One replay cannot establish a universal conclusion. The structure can still experience substantial losses, including full defined loss. FOMC days differ. Fills and liquidity matters, and the exact path of spot and volatility can materially change the result. The important learning is to feed these observations back into the options engineering process. so future Skyline versions can continue to be tested, refined, and evolved. Session and replay was useful. Please like the video, subscribe to the Options Engineering channel, and leave a thoughtful comment. It helps me continue creating this educational content, and it also helps me understand which questions, replay days, and Skyline research areas viewers find most useful. If you see an interesting stress point or a scenario worth testing, please share it in the comments or reach out to theoptionsengineer.com.